Hey guys, welcome to this week's market update here at CNA. My name's Pav, lead market analyst here at SwiftX. And what a week we've had, right? 2024 off with a bang. Started off with some sort of internal hoax at the SEC about the Bitcoin ETF approval in the last 48 hours. Got dismissed. And then in the last, just overnight, we've seen the actual ETF approved. So huge news there. I've included a link in the article just to sort of go into depth what the ETF means and how I believe it's going to be the next wave of institutional investments entering the crypto markets for the foreseeable future. It's going to be a pretty seismic phase shift, but we'll wait and see what the actual results are. The first day of trading will start tomorrow, so we'll see what the inflows are currently like. There's, I guess, a lot of speculation going on how much it's going to actually inflow into the market. So we'll wait to see it to believe it. But what we can do is look at some charts, look at some technicals. And, Bitcoin for all of 2024 so far has been very choppy, to say the least. We have had these key bullish structure breaks to the upside, which is good. But as you've seen, it's been a lot of just choppiness. And, I wouldn't be surprised if there's been a lot of people that have given away a lot of the profits they've made, especially on leverage. Just during this sort of market condition. So sometimes it can just be best to wait and see what happens. But what's key for Bitcoin, it is hitting into this area up here, which is a prior all-time sort of key monthly high, I should say. And it's acting very much as a bit of a resistance area. We're seeing quite a bit of distribution up here. So what we want to see is this key support level hold. And this is crucial. If Bitcoin does fail in a meaningful way, it's going to spell some pretty nasty outcomes for a lot of altcoins. So something to really pay attention to. But what we want to see here is essentially us start to head towards this March 2022 high, 48 and a bit of change. That's going to be a pretty big positive structural market shift. It's the last high before the markets really broke down and started that bear market. So even from a sentiment and market structure point of view as well, it's quite a big deal to close above that on a meaningful time frame, like a weekly or something like that. Once we get over that, there are some decent targets on a monthly time frame heading into these key Fibonacci levels, which the prior cycles have respected quite well. So, I'm not going to call it now, but yeah, we're looking anywhere from 48 to 63, 57K, somewhere in that vicinity. I mean, even this left shoulder here on a monthly time frame, just under 60K. That's not unreasonable to think. And, everyone is sort of calling for some sort of reversal. This is probably an area where things will start to get quite frothy, start to get quite risky again. I guess, upside potential reduces. But that's the Bitcoin. What's interesting is something we pointed out, I guess, at the end of last year, which was the rotation of capital starting to look like they're heading into altcoins. So not for a full-blown alt season like we see in our bull market cycles previously, but there's nothing to say there isn't more upside on something like this chart, which is the total market cap of all assets minus Bitcoin, minus Ethereum. So what we're seeing here is when this goes up, the total allocation of capital rotating into altcoins is on the up. So what was key last year, we got above this bear market high and we'd gone back for a rounded retest, and looks like we're reacting quite nicely off of that. So this is a weekly time frame. I mean, for full confirmation, you want to see this one still run another 10%, inject a bit more, start to get over 500 bill market cap in those altcoins to structurally put in a higher high. And then that may signify the next trend to at least run to this mid-range. And then from this mid-range, I'll be looking at this key level. And this is where things might be starting to get quite elated. This is where you might want to consider profit taking, or I personally will be as well. It's just a risk, I guess, increases the more you're holding positions into areas like up here. Not to say it can't go higher eventually, but, we'd want to see how the market responds once it reaches into this sort of region. So another way to visualize that, the flow is going into crypto assets and out of safety is to look at something like USDT dominance. So what is the total market cap of a stablecoin doing? So on a weekly time frame, we've seen, again, it's all completely just TA, but a range that had formed. We deviated, broken down, done a retest, and now we're breaking the lower end of the channel. So that kind of tells me that if dominance is decreasing and the total amount in the market caps is remaining the same or at least increasing, which what we're hoping for, that does suggest investors are flocking to on-risk assets and out of vehicles of safety like stablecoins. So that's a good sign as well. Two crypto assets that I've mapped out today, stacks. So, we can't ignore the recent velocity behind ordinals, BRC20 tokens. Stacks is a layer two, I guess, network on top of the Bitcoin chain. So, lots of chatter about miners and all-time high profits due to all of the inscriptions and things that are happening on that on the Bitcoin network right now. Miners making crazy amounts of revenue, which is always good to see. But structurally and technically, this one has been in an uptrend. And what we had seen is during August, September, October, and November, a reclaim of this longer term trend channel. And when you look at a structure like this, you usually have two targets, the middle of the range and the top of the range. So the hard thing with diagonal channels like this is as time progresses, the price target moves higher. So it is quite hard to give a dollar figure of where this could be going. But what's key is there is this previous all-time high and this cluster of highs here, which may line up nicely with this middle of the range for some profit taking if you were looking to speculate on something like this. So, there is a potential for that to be a target to aim for from a horizontal price perspective. But once we get to that level, the next target would be the top of this trend channel. And then who knows, like it could go higher, it could go lower. Technically it would have to be reassessed, but that's currently what's looking good on stacks at the moment. And fundamentally it's looking like it's on trend as well. Injective protocol, we talked about this one quite a bit last year. It was one of the top runners. It's shown a lot of strength, broken all-time highs against Bitcoin. One of the few, one of the few really, to start to do that were a previous cycle coin. So lots of strength there. And right now it's broken a key resistance level. It's formed some high highs. It's formed some higher lows. That's good to see from a market structure point of view. And right now, looking at the previous high and the previous low using Fibonacci, we have seen buyers step in at an optimal trade entry area, which is the 618 Fib level. So again, nothing magical about Fibonacci's. It just is a way to measure, rule map out the market, set some, equal range targets to the upside as well. So the first target level for this would be the 272, which is about 48.50. So a bit of a shorter term time frame trade on this one, whereas Stacks was on the weekly. But these are two in-market opportunities that technically are lining up right now. So I hope that you guys found that helpful. If you'd like to hear or see more, you can check out my Twitter, give me a follow at Pav Hundal. And we'll be back next week to look at what else is moving in the market. Thanks, guys.